So you want to learn how to get these sniper entries and get maximum profits on all your trades and take your trades from looking like this to looking like this. Well, I'm going to teach you everything you need to know and learn within this video on how to get these sniper entries and how to build that confidence so you can take earlier entries, get it at the right time, and take beautiful RR trades. So let's get straight to it. So we're in US 30 right now. The 2 to 3 examples we're going to be talking about when it comes to getting those sniper entries is one, using other time frames to kind of give you a future perspective of what price is going to do right now within a lower time frame. 2, retest and rejects, and 3, just overall confidence and how to build your confidence and add to that within your confluences. So let's get straight to it. Like I said, we're in US 30. Right down here, we have a demand zone. We have a demand zone because we have this big impulsive candle, and like we mentioned in the demand zone video, we chart the previous candle to there, the top of the candle to the bottom of the candle, all right? And within there, we had a big rejection right there. I wish my mouse would show on the screen, but it won't, so I'm just going to chart it out. And we had a big rejection right there. So you're thinking, oh, maybe I should enter in right there, woo, woo, woo. But you can drop down to that 15-minute time frame. You can drop to that 15-minute time frame, and as you can see, no. You still got a big bearish look right there, and you shouldn't be doing that, all right? And on top of that, there was no liquidity swept. And we all know, I said it 100,000 times, the market seeks liquidity and balance. Regardless of how many buyers are in here right now in the demand zone, it wants that liquidity and it wants the money. It does not care about the demand zone. So let's say you wait, okay? You're a smart trader, you listen to JT or whoever you watch, and you wait for liquidity to be swept, boom, it sweeps it. Now you're waiting for the confidence and the confluences to enter in the trade, but you don't know when because look, it's consolidating. Yes, it's giving you these wick rejections to the upside, but it just doesn't look like it still looks like it could continue selling and it might not start reversing into the buy side. And that's when you can drop down to the 15-minute. Now, before we drop down to the 15-minute, as we can see, we had a big bullish candle there. So the moment you start seeing that buy side pressure within there start to form, because where price closed and it had to have jolted up. If you're confident enough, you could have entered in right there, stop loss below those lows, and you could have held your TP either to that supply zone right there, or you could have held it all the way up to here. And if we stretch it out, this would be a really big trade, a really long trade, but ultimately it hit your TP. And that's if you had the confidence to enter in right there. But let's say you didn't have the confidence once it swept liquidity and gave you that buy side pressure. You could have dropped to that 15-minute time. You could have dropped to the 15-minute time frame like right here. And as you can see, big bullish push, doji candle, strong rejection after it swept that liquidity. Now note, the 15-minute time frame, every 15-minute candle is 3 5-minute candles, okay? So within this big bullish push were these consolidation candles leading up to this big bullish push, okay? So within that 15-minute, the moment you see that, because how low price is and how big it went, if you really are aware of price and genuinely put in the effort when it comes to learning price action, and you could react to price when it opens a new candle, you can see just about every time when it opens up, especially in the direction it wants to go, it'll have a lot of volume, it'll push up and just jolt to whichever direction. So I already know that most likely with this big candle, price probably jolted. So I'm going to enter in early, or I'm going to at least chart this out and then drop down to the 5-minute, and that's where I'll take my entry, okay? We can drop to that 5-minute and boom. Not only do we have an earlier entry, slightly earlier, but still regardless it's earlier, which means more money, even if it's just a little bit, making this a 1 to 13 RR, and you could hold it to there, which eventually got tagged out right there, or you could have held it all the way up to that second supply zone. All right. And that's overall just using the 15-minute time frame. The 15-minute time frame, not exactly, but it kind of gives you a future perspective of what price is going to do within lower time frames, which is why A lot of people, when it comes to getting those sniper entries, if you don't have the confidence right now to take a trade when you should, then you could use that 15-minute, and that'll give you the confluences and confidence to take that trade. Second example is going to be retest and rejects. So we're going to go to this supply zone up here. All right. Same thing, chart the previous candle. Not only did price come up and retest here, it came back up, retested again right here, and then a little steeper sweeping liquidity. Okay. So you're a smart trader. Again, you listen to JT. You knew that market seeks liquidity imbalance. In this case, all it was looking for was liquidity because there is no balance to be balanced out, which would be like fair value gaps and etc. And boom, it swept that, gave you an immediate rejection, and boom, sell side candle. All right. You would have either entered right here, or you would have entered off of that retest and reject when it came back and retested with that candle after the sweepers of liquidity. And you would have got in here and you would have held it all the way down to slightly past that liquidity area, because obviously it has to sweep it, which means it's going to push further past where liquidity is. And stop loss above those highs. Yes, it's a 1 to 4. It's not a bad looking trade, but it could look better. Okay. Now, once it swept liquidity and gave you that sell side pressure, just like down here, if you have the confidence like you should have, then you would have entered around here-ish, or maybe here, or maybe right here below the bottom wick of that doji candle. That would be a better look, and that would be a 1 to 6 RR, maybe even a 1 to 7. All right, we'll leave it at a 1 to 6 RR. All right, and that's just off of that. Now, let's say you drop to that 15-minute instead. 15-minute time frame, like we said, every 15-minute candle is 3 candles in a 5-minute time frame. Okay, and as you can see here, boom, big bearish candle right after sweeping liquidity. And just like the last candle, which was big bullish, after sweeping liquidity, I already know it had the big jolts to the upside, or in this case, big jolts to the downside, the sell side. And after sweeping liquidity and doing that, you could have entered in right there. All right, you could have held your TP all the way down, slightly past where liquidity was. You could have put your stop loss above those highs. All right, we can drop down to the. All right. Then we can drop down to that 5-minute and look how much earlier that entry is. This is now a 1 to 11 RR trade. This went from being a 1 to 7, 1 to 6, 1 to 4 to a, let me undo it, to a 1 to 11 RR. Look how tight that stop loss can be. Make it a 1 to 12 actually. And look how far down that take profit is. And that ultimately only took maybe at max an hour. And you caught that whole move, that entire move. You got about 95, if not a little more, of that entire move. You got every single bit of money in that move because you used a 15-minute time frame and you were confident to go off of that and enter early. All right. And you took 2 beautiful trades just like that. You took that big sell side move, and then you used the 15-minute again, and you took this big buy side move. That's 2 trades right there. And yeah, and then our third example, which isn't chart related, is overall mental, is confidence. You lack confidence, not because you're a terrible trader, but because you are focused on the money too much. And now you're focused on the money too much. You might be risking too much. And overall, you're just focused on the wrong things. You're too worrisome. You need to desensitize yourself from the money aspect. Because like I've said before, you focus on the money too early, you think about the money too early, you will not succeed as quickly as you actually can become successful and at least profitable than others. Because that's why a lot of people take so long within these markets to become profitable or successful, is because they continue to do the stupid stuff and focusing on the money aspect way too early. Therefore, that just completely strives throughout their entire journey. That's what you need to be the opposite of. So when it comes to building that confidence, so you can overall take those earlier trades and get those sniper entries without having to use any of that analytical stuff, is building that confidence. You might be risking too much. Risk less. So then regardless if you lose, it is what it is. You risked an amount that was absolutely nothing to you other than just a number. Okay? Another thing to build your confidence is, again, treat trading like a business. Therefore, when you take a loss, it is a business expense. You look at it, you analyze it, you improve off of it, and you move forward. Otherwise, you will not move forward within trading if you can't do that. Okay? And overall, just understand the market, which you should by now because I've mentioned it so many times, and just being patient and overall being confident regardless if the trade loses or not. That's what's ultimately going to help you get those sniper entries. And to add on to that confidence or to build a better confidence, you can use that 15-minute, or you can be aware of liquidity if it was swept or not, or you can be aware of retest and rejects. And that's just how you get those sniper entries, and that's how you move from there. All right. But I hope you learned something. You can like, subscribe, go to the gram, whatever you want to do. I'll see y'all.